Good evening, everybody. All right, tonight we're going to kind of do a kind of an evaluation through the years, or I say through the years recently. I mean, we're doing our free training on the 12 major signals, which is kind of your bread and butter candlestick analysis. If you go right down to the basic premise of the graphics, the candlesticks, it's where the Japanese traders over the last 400 years has provided not only the signals and patterns that work effectively, but they also told us what the psychology was that created these signals. So through the years, I've often been asked which signals are the strongest, and the answer to that is none of them, other than the kicker signal was extremely strong. But there are signal combinations and patterns that work effectively. I usually say it depends on what the conditions of the overall market is, of which signals are going to work the best. Some months you see a lot of hammer signals at the bottom, a lot of shooting stars at the top. Next month it might be a doji gap up. So it's all a function of what the market conditions are. So there's really nothing to say that one is stronger than the other. That's why we've narrowed down the 50 or 60 signals down to the 12 major signals. But that also puts us in a situation where there are signals combinations that work extremely strong. So, so a lot of times people will say, well, shoot, you just looked at 50 or 60 charts and they all look good. How do we pick out which one's the best? So what I've done over the last month or two is kind of set up a quantitative scale of which ones work the best. You've seen them all, but what we're going to be doing on September 23rd is going through 4 hours of which signals and patterns are the strongest. The ones related to the doji, the ones that related to the other signals, and the patterns that work the best. There's about 14 of them, I think, that we picked out. And then we're going to quantify them. We're going to do the final hour saying, all right, here's the ones that if you're going to pick the best one, here's number 1 and here's number 14, go right down through the list. That doesn't mean the 14th one is bad. It's just that we're quantifying them based upon the strength of each signal and pattern. So we're going to be working on that, and we're going to have some illustrations of some of the ones that work very effectively as we go through the session tonight. So what we're going to do is to kind of go through the charts that look good right now, the charts that have extremely or a few of the real strong signals and patterns and where they've worked and why they've worked. And then we'll do our analysis of different charts after that. So as we can see, there's still this wedge formation going on in the market. That doesn't really matter. I mean, the wedge formation basically tells us there's really no direction in this market, whether you're looking at the Dow or you're looking at the direction of the NASDAQ, which is not anything real decisive right now. The transportation index still caught in the sideways below the 50. Won't become a relevant factor until we can see a bobble breakout through the 50. But the illustration of this is to point out that without any major market direction, how do you decide whether you want to be long or short? And fortunately, with the simple scanning techniques of candlesticks, in a market like this, you're better off being both long and short. And we will have some illustrations of why that is. So Let me first go through some of the charts that we've been recommending recently and why. For example, notice the uptrend on SPPI. Started with your best friend signal, which is one of your strongest signals. But notice why we want to know what the nature of a doji type day is. Very indecisive. And notice where it's very indecisive. Right smack dab on the T line. So when it broke out, what did that illustrate? It told us when they were trading this indecisively for 2-3 weeks, when this move came along, it told us what was happening after that indecision. So that's just kind of logic put into our graphics, or the graphics illustrating the logic. And then if you add the additional factor that they couldn't close below the T line, that tells you you've got a wave 1, wave 2 going into wave 3. So that's why we started recommending this one a few days ago. So anytime, again, the T line becomes a very strong factor. Notice how our left-right combo is one of your strongest signals. And that we can go into explanation in our training of why that's such a strong signal. And then notice what it did even on this day right here. Where did it close? They never were able to close it back below the T line. So logic says if this is our belt hold signal and they're still buying and they've never closed below the T line, stochastic's heading up, if you're not in it, where's a logical place to buy? And it breaks out through this level, telling us we might be adding to our uptrend. So again, everything that we kind of illustrate, or what is illustrated, built into candlestick signals, is just common sense graphics that make it much easier to be in the right place at the right time. Same scenario here on MYGN. This is why we always say long as it stays above the T line. Notice our big left-right combo, and then our 45 degree. And what was our simple application of holding this trend? You stay long until you see a sell signal and a close below the T line, which we didn't see. Then it had a pop-up, so looks like we're still in an uptrend. However, we got a shooting, or kind of a doji day after a gap up in the overbought condition, with this wave being about the same magnitude as this wave. What's that tell us about this information here? We get ready to take profits, especially if they come back down through the low. So again, a very simple, common sense application of what's happening in human nature. You can see incorporated into the candlestick signals. Again, but basically takes the emotions out of your trading. Should happen. And again, here's our J-hook pattern. SQM. Where were we buying? Well, notice the fry pan bottom breakout right in here. Where was the profit taking? Obviously right here. When they gapped it back up above the T-line, what type of pattern did we have setting up? A J-hook pattern. So as long as you recognize close below the T-line, yes. Remember, the most important factor is that the Japanese rice traders have developed for us is where it opens and where it closes. Those are the important things that make up a candlestick signal. So if it closes below the T-line, you're out of the trade. If it trades back up on a buy signal back up above the T-line, you can start buying back in, because if we recognize what type of pattern it's setting up, it gives us that much more confidence. I say much more confidence. In the old days, if I happen to be lucky enough to take profits right here, or they got me out of the trade, I wouldn't get back in, because remember, they were going to try to trick me into getting back in, so that if they turned it right around, I lost some profits again. Now at least I know what human nature normally does, telling us we have a J-hook pattern in progress. So I'm much more much more inclined to go after trades now because I know what human nature does. Isn't it scary to be in these stocks that are extended from the 50? Not necessarily. We're not trading the 50. We're trading the signals and patterns. Now, when they start moving away from the T-line, which we'll take a look at, then we have ways to start taking profits. Lumber liquidators we recommended because of kind of our cup and handle or classic pattern. It's still in this uptrend. And now the very simple rule is we can stay long on this as long as it stays above the T-line. What signal is a left-right combo? Left-right combo will show here in a minute. All right, so you can pick out which sectors are acting well. Obviously, the gold sector is acting well right now. But again, there's your classic. There's your fry pan bottom. There's your best friend signal. And notice on the pullback what they did. They got very indecisive right here at the T-line. And then notice our doji sandwich breakout starting our next wave. So we got a wave 1, wave 2. We can recognize when wave 3 is about to start. And we know that's a logical pattern because of our classic pattern, which is a fry pan bottom, strong price move. Pull back indecisively to the T-line, J-hook pattern setup. I don't buy stocks that are too far from, again, we're not buying the moving averages, and the moving averages are merely confirming indicators. The most important aspect of trading is what type of investor sentiment are we getting. The T-line, Carl, let's see, I don't even have the 20 on here. We've got the 200-day, the 20, this red line is the 200-day simple moving average. The blue line is your 50-day simple moving average. And then we usually have the 20. I just don't have them on this chart. Those moving averages are what every major money manager around the world uses those moving averages to make decisions about their portfolio. We just use them to see exactly what's happening at those levels, of whether they're buying at the 50-day moving average. The T-line is the 8 exponential moving average. The T-line is short for trigger line. Very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. With a caveat, the further away you move from the T-line, the higher the probability it's going to come back and test it. With charts like lumber liquidators, is it too late to get in at this point? If not, is there a best technique to get in? Yes, John, one of our training sessions that we do in the members area is the entry, which we're going to be doing here fairly soon. We usually do on specific topics. We use Tuesday night and Wednesday nights because Monday nights we do the analysis session like one of these, but on a Monday night for members. Thursday night we're doing these type of sessions where they're open to everybody. But Tuesday nights right now for the next couple of months are going to be filled up with the basic 12 major signals where we go into each one in great detail. So lumber liquidators. Let's see, did I answer the question? I forgot what I was answering. Oh, yeah, so the techniques are right here. And this little breakout told us, yeah, it's time to be buying. Is it too far away? No, you can still be buying this one. What do we expect out of here? And the next wave, the same magnitude as this one right here. And notice how this is a very strong uptrend based upon what we call the kicker signal. That's your strongest reversal signal. Yeah, the green line is the 3T line, which becomes more relevant the further away you move from the T line. Yes, and one of the sessions, Steve, will be the basics of option trading, which I stay with the basics. Because if most people have a problem figuring out what a price move is going to do, let alone what type of option strategy to apply to it. We kind of combine those, which are the best option strategies for the price move that we're looking at, and how much time we have to the specific expiration date. So yes, you can still be buying this one with the anticipation you might finish out that type of move. This works for Forex. No, that's not quite a slow curve. I've got some slow curves in here that I'll show tonight, David. Gaddy, candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. It doesn't matter whether that time or that trading entity is stocks, bonds, currencies, Forex. It's the measure of the investor sentiment in the trading. So whether you're trading stocks, bond, tulip bulbs, anything that has fear and greed, candlesticks will work on it. Yes, the moving averages are essentially what it's doing. The advantage we have with candlesticks is we can see exactly what the investor sentiment is of those, or what the investor sentiment is at those levels. The black line is the T line, the 8 exponential moving average, correct. And I don't have the 20 on here tonight. I just pulled off one of the charts. So we recommended AB EV the other day. Let's notice our little best friend signal breaking out of this kind of congestion here, a little slow curve. What's our next move? Well, if this is wave 1, this is wave 2. Wave 3 should be fairly substantial. Adrian, hold on to your individual stock requests until we get done with the all this. The 3T line is a 3 exponential moving average. Just works as a better indicator when you start moving too far away from the T line. The blue line is the 50 SMA. The red line is the 200 SMA. I don't trade Australian stocks. I don't need to. I got so many to trade here. But again, they work. They're going to start you come up with. No matter what markets you're trading, candlestick signals are the just the graphic depiction of what's going on in investor sentiment. So whether you're trading any market, even tulip bulbs, yes. So we recommended DVAX today because of the fry pan bottom, and we were right here at the breakout level. If you can still buy this one if it breaks out through here, because wave 1 and wave 3 will probably be the same. On ABEV, right here, you had a doji followed by a gap up. That's your best friend, one of your strongest bullish indicators. And then notice what it did. It broke out through kind of this resistance level, telling you there is now a new dynamic in this this chart pattern. And again, this is the type of thing that we're going to be going through in great detail during our 4-hour training sessions. These are all daily charts, Bob. Yes. If you're but these, you could be looking at a 1-minute chart, a 10-minute chart, an hourly chart, or a monthly chart. They're all going to look exactly the same. If you go back to the very basic description of candlestick signals, it's the accumulative knowledge of everybody buying and selling during a specific time frame. Doesn't matter whether that time frame is 1 minute or 1 month. Paulette, that is, yeah, that's going to be based upon each person's trading nature. Depends on how long-term or how long you're going to hold the options. I've got options right now on some stocks, which we'll get to, that I may only be holding for 2 or 3 days. So I'm going to use the daily chart. The stochastics I use are 1233, and that was nothing more sophisticated than sitting down one night about 40 some odd years ago and saying, all right, the norm at that time was 14.55, but that seemed a little bit too slow for what I want to do because I'm a swing trader. So I sat down and started tweaking and said, all right, if this isn't bottom, where's the bottom of my stochastics? If this is the top, where's my stochastics? And 12.33 has always worked extremely well for me through the years. Okay, some other ones that we recommended. Again, I don't know why this does this. This is that fry pan bottom setting up. Now, remember, you stay short until you see a buy signal and a close back up above the T-line. Well, at this point, we saw a doji inverted hammer. Inverted hammer is one of the 12 major signals, and I forgot to describe why we have 12 major signals. Out of the 50 or 60 candlestick signals, the 12 major signals, when I started analyzing, obviously I was greedy enough that I wanted to make sure I knew every single signal. That's a tongue twister. And then as I kept studying them and learning, I discovered that the 12 major signals not only occurred 99% of the time or more, but they were the ones that produced the biggest returns. So at some point, I narrowed it down to the 12 major signals because there was no sense spending mental time and energy remembering the other 50 or 60. I just wanted to know the ones that were going to make me the most money at the with my trading. Yes, they work with tick charts. Can you talk about the candlestick buy signals? Well, you're going to be seeing some of those. The inverted hammer is one of them. And we're right now, Bob, for the next 9 weeks, every Tuesday night, all you have to do is register for free. We're going to go through each of the signals and explain where they work, why they work, and what the psychology was that created those signals. If you know that combination, you pretty much can analyze a chart just as sophisticatedly as somebody that's been trading in the market for 50 years. Do you use any other indicator besides stochastics? No, I don't use stochastics as an indicator to make my decision. The logic is if you see a candlestick buy signal in the oversold condition, the Japanese rice traders say your probabilities of a uptrend is pretty strong. If you see a candlestick sell signal in the oversold or the overbought area, probabilities are pretty strong you're going to be in a downtrend. Not any more sophisticated logic than that. If I see a candlestick buy signal in the oversold area and it closes above the T-line, I know the probabilities are pretty strong. I'm going to be in an uptrend after that. All right, so a few more. Let's see. Did we do DVAX, DVAX? This one we are buying. Oh, and this one I had in here for some reason. This is the whole point. This is what we call our morning star signal. Big down day, either 1 or 2 days of indecision, and then the third day closes more than halfway up this candle. In this case, not only did it gap up from the doji, but closed well above the halfway point and closed above the T-line. I'm a buyer right in here, which is where we recommended it that time. Now, this candle right here basically is your bearish engulfing signal in an overbought condition. What do we need to see? We need to see it open positive and trade positive to stay in it. If it starts trading lower, we take our profits. So not only does it show us the buy signals, it also shows us the sell signals. And with the graphics of candlesticks, we've got a major advantage where we can see, all right, there's a sell signal. Is this a relatively important level? Well, if we can look right back here and say, yeah, that's where they kept topping it out before, that tells us the probabilities are pretty strong. It's time to take profits. Wasn't today's down day the bearish confirmation? John D. on what? You scan, yes, there's scans. If you can verbally say the signal, there's simple scans out there. We've got the scans on our website. I think our scans are on Thinkorswim, TCNet, Metastock. I think NinjaTrader has them. I don't know whether they've got them up yet on the trade station. Show a chart if you're going for long exactly at the point that would be buying. It makes me confused. If this is my buy signal, what do I want to see the next day? I want to see the bulls are still there. So if it opened down here, notice where it bounced, right smack dab off the T-line. Now here's the most important, I've kind of skipped over the most important factor of the T-line. Everybody uses the 200 and the 50 and the 20, if I had it on here, as their decision-making point. So they act like magnets. People aren't until they get those to those points, and everybody has those on their charts to see what's happening at those levels. The T-line, the 8 exponential moving average, nobody has that on their charts. So if we can assume, or we should assume, that it works very effectively based upon it's a natural kind of Fibonacci characteristic of human nature, that if you combine the fact that candlestick signals are the graphic depiction of what's going on in investor sentiment, and the T-line is the natural support and resistance level of investor sentiment, when you combine those two factors together, you've got an extremely high probability, strong trend analysis tool. Wasn't today's down day on the bearish John on that bearish engulfing? Which one was it? Oh, this one? Yeah, that day would have been a down day, but now for a sell signal. But we were still above the T-line. So the next day, what do we want to see? We want to see bearish confirmation, which if it was trading lower, where do you think it was going to? It's going at least back to the T-line. Wabob, we'll be doing an entry strategy session for members probably within the next week and a half. How do you confirm price direction after a close above the T-line? You stay long until you see a sell signal and a close back below the T-line. Stochastics below 20 is oversold, above 80 is overbought. On this one, yes. Should have gotten out today. Now, what's the next criteria? Well, if we start seeing buy signals, what's our next pattern setup? Play a J-hook. You can always buy back. Yeah, if something closes below the T-line, if you have a sell signal in a close below the T-line, close it out. That means the sellers have taken control. Okay. You use stop losses or watch and sell the next day of the stop? No, the logic of candlestick signals is it tells you when the bulls are in control and tells you when to be out of a trade, and not based upon any formulas or anything other than what are the signals telling you. How do you tell change in trend from consolidation? Based upon the nature of the signal. Notice how it was very indecisive right here. Back to the T-line. That was consolidation. Still heading up. There was your sell signal. Okay, let me zip along here. All right, so one of the strongest signals is our left-right combo. Somebody was asking. There's a left-right combo. That's a doji followed by a bullish engulfing signal. And this is what we call convergence analysis. The more pieces of evidence that you can put into your graphic analysis of where the buying is occurring, we've got a left-right combo, which is one of your strongest reversal signals, with stochastics coming up off the 50, a close above the T-line. What's our rationale? If it opens positive the next day, we want to be buying. Is this ready to turn around, or are we still in an uptrend? Right now, all we can conclude is that Netflix is in an uptrend until we see a sell signal and a close back below the T-line. Now, remember, the further away we get from the T-line, the higher the probability it's going to come back and test it. So once we get up here in the overbought area and we're moved a good distance away from the T-line, you set a place where it logically shouldn't trade, like right here. But if it came back down through there, it's telling us the sellers are taking control. So everything that you apply to a candlestick analysis chart is based upon common sense. Where is the signal being created? Same thing over here while we went short on REN. There was your left-right combo, and where did it fail? Right smack dab here on the 50. Where did it close? Below the T-line. What was our overall trend of this? Well, we can see we have a downward trend channel, and notice that yesterday they took it up, and where did they fail? Right smack dab on the T-line. Now again, was that because everybody was watching to see what happened at the T-line? No, because nobody has the T-line on their chart. We've got the extra advantage of seeing exactly where the failure was and got ready to go short again, or if you hadn't shorted over here, when it came back down through this level. But the point of this one is that left-right combo right here failing at the 50 was a good indication. They aren't going up through the 50. They're still in this downtrending channel. The fry pan bottom is one that we're going to be going into extensively. Fry pan bottom tells us exactly where we want to be buying. We're right here at the beginning of this pattern. Let me see if I can put it right there. Tells us if they are trading positive the next day, that fry pan bottom's breaking out. We want to be a buyer. Now remember, we've just gone through a bunch to say you want to buy a candlestick buy signal in the oversold area. It's different or a pattern. Where do most people buy? They buy exuberantly after a pattern. So you're more than likely going to be much closer to the overbought condition than the oversold condition. So here's another fry pan bottom in JSO that broke out right about here. Now, when do we take profits? Stochastics are usually going to be indicating in a pattern that you're already up in an overbought condition. What is your trading time frame for equities? It all depends on each individual, Bob. I'm a swing trader, so my trading equities usually is I'm going to be in a trade for anywhere from 2 to 10 trading days, depending on the markets. If I'm trading intraday, like soybeans or cotton or something like that, I'll probably be using the 10-minute chart as my bellwether. But that's a whole different. You can use the hourly chart depending on what you're trading. Again, you trade based upon the time frame you want to trade in. If you're scalping, you might use a combination of a 1, 5, and 10-minute chart. If you're a swing trader, you might use the daily chart and then use the 10-minute, 30-minute chart to confirm. So when I say confirm, what do we expect coming out of a fry pan bottom? Again, there's our left-right combo telling us that we had a bullish engulfing. Our uptrend was still in progress. When it broke out, what can we visually see is happening here? We've moved a heck of a long ways above the T-line. So do we wait for it to create a sell signal? If we did, we've lost a lot of profitability. So we got a very simple process for that. You go to your 10-minute chart. And when your 10-minute chart starts coming back down through this level, you close out the position and take your profits. Why would you use a 10-minute chart? Because our daily chart is telling us we're way too far away from the T-line. The probabilities of profit taking up here is going to be much greater. Do you use stop loss being just below the T-line each day or sell the next day after it drops below the T-line? Usually if we can see there's been a major change in the market direction and a stock's been trading up above the T-line for the last 3 weeks and it's just kind of hugging the T-line, yeah, I'll probably put a stop just below the T-line intraday, because if it comes back there, it means there's a a change of investor sentiment. So again, these are all things that we, when we do our stop loss training, it's just simple logic. Everything has just simple logic that you look at it and say, where should this not be trading if my uptrend is continuing, or the other way if it's a downtrend. All right, so if we know where a breakout is likely to occur, we can get visually prepared for the breakout. Notice what's happening right here, where this fry pan bottom started. We had a nice bullish day that went not only through the beginning of this fry pan bottom, but closed above the 50. Where do you think our next likely target is going to be? Probably up here at the 200. If it goes through the 200, where's our next likely target? Where everybody else is watching to see if it's going to fill the gap. So essentially all we're doing is putting ourselves in situations where we know what the prospects are, or the high degree of probability, based upon what the results should be coming out of these patterns. So things like Restoration Hardware. Observed the obvious. The obvious was very indecisive when it got back to the 200 in the oversold area, closed above the T-line. This is where your buy point would have been. So my rhetorical question usually is, you always get big moves like this based upon candlestick charts? The answer is definitely not. But the probabilities of being in the right direction at the right time are greatly enhanced. We don't have to know why it was going to pop up here. All we can analyze was that people were buying it for some reason, and that's exactly what we want to be able to analyze from our charts, is where are they buying? We don't have to know the reason. Was there a buy signal? Yes. Look at all the dojis. Look how it's supported on the 200. And then after a series of dojis that closed above the T-line. What did the T-line tell us all the way down? It was acting as a resistance level. What's our simple criteria for buying? Candlestick buy signals and a close above the T-line coming out of the oversold area. Let's see, WTTR, another one. Well, that ain't a fine howdy do. That one's not coming up. SGN. There's your fry pan bottom. There's your J-hook pattern. What's the prospects on this one? More than likely, next wave is up to the 200. Mike, it could be the drug stocks this month. Next month, it could be the transportation stocks or the trucking stocks. We don't care what they are. All we care about is who is buying what on any given time frame. So this month it might be you're going to make lots of money trading the biotechs. Next month might be you're to make a lot of money buying the trucking stocks. Next month after that might be another sector. You trade close to earnings. That's up to each individual. You could be buying right about in here, because where was our breakout level? Right there. So if it was trading positive after that breakout, where do you think the first target was? The 50. And you want to see if it went through the 50. If it came up here and failed and did a shooting star, what did that tell us? It told us the 50 was acting as resistance. So back to the trading on earnings, that's up to each individual. And because candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame, if they're buying going into the close on earnings day, that means probably somebody with a lot more smarts than we have, or a lot more inside information, is buying. So I would say probably 80% of the time, if you're going into the close, that's probably what's going to happen to the next price move. Meaning, if they're buying going into the close, it's probably going to be good earnings. Now, are there surprises? Definitely. That's why they're called surprises. That if it opens up down in the other direction, Yeah, it didn't work. But I would say for every time I get into a earning situation that didn't work, I probably had 4 that worked well. When do you draw the breakout line for fry pan? Usually right about where you can see the fry pan actually starting. And that's usually, you can see how they had a kind of a rounding bottom. And the fry pan, the reason we keep coming back to the fry pan is because it is such a strong breakout visually of when you can be buying. So whether you're a stock trader or an option trader, it pretty much gives you the exact point where you can be entering a trade and not have to wait around to see what it's going to do on the breakout. You are actually buying the breakout. We are going to be going through the doji sandwich, which is kind of a pattern that tells you if this is a breakout point, and we've got a doji sandwich. A doji sandwich is a big bullish candle followed by a doji. Is the fry pan bottom your favorite pattern? Not necessarily. It's probably one of the top 5. You said have you used this for a 4-hour equity chart? Have you used this for a 4-hour equity chart? I don't know what that means, Bob. Do I trade off a 4-hour chart? Not really. I'm usually trading off the daily. If the daily chart tells me that we should be moving in a positive direction, then I'll trade off my 10-minute chart if I'm day trading. But usually I'm swing trading. Now, what's a doji sandwich? Big bullish candle, then a doji. We have a very simple truism about candlestick analysis. The price will usually move in the direction of how they open it after a doji. So if this opens positive, what do we know about this candle? It's probably going to be about the same magnitude as this candle right here. And if it's that magnitude, what's it tell us about our resistance level? They're not holding on their resistance level anymore. There's probably a lot more upside. Yeah, so call this a doji sandwich because you got a big candle, a doji sandwiched in between another big candle. Steve, that's the whole point of what we're doing in 2 weeks from now. We're not just going to have a list. We're going to have an explanation of why each signal works so strong based upon dojis, based upon the candlestick signals in general, and based upon the pattern breakouts, and which ones are the, out of those, we're going to be looking at the strongest ones, and at the end of the session, we're going to be going back through and say, all right, if I was going to pick out the best one, here's number 1. We go down to the 14th one. But once again, that doesn't mean number 1 is, or number 14 is bad. It's just the lowest of the best of our analysis. And the reason you want to have that information in the back of your head is if you have a day where the market turns around and you've got 60 good chart patterns out there or good buy signals, obviously you're not going to be able to buy 60. You're not going to even be able to buy 6. You may want 1 or 2. We can figure out which ones are the best or have the strongest upside potential based upon the new trend in the market. What else we got here? Slow curve is going to be another one. Slow curve is very easy to identify. It's just a slow curve. Notice how when it pulled back, indecisive, and then broke out. This is where I make tons of my money, especially trading options. Because if I'm buying calls right here on the close, which I don't do most of the time, but if I see something setting up, what I don't want to miss out on is I'm gapping it up and taking off. If I buy calls here or buy calls here, it's based on knowing that this move right here is going to be extremely strong. On top of that, if I bought some calls here and the next day it opened lower, it didn't break out, I close out the position right away. But my risk-reward factor is, if I'm buying calls right here, I usually get big price moves like that. And we also will have things like the bobble, which is a more sophisticated J-hook pattern. Bobble is, notice our left-right combo that ended this downtrend. Notice where it failed, right here at the 50. So this is our bobble, where it fails at a resistance level, bobbles down, and then notice our little scoop type pattern and came back up through the 50. That tells you the 50 is not acting as resistance. We've now got a wave 1, wave 2, wave 3 J-hook pattern, which is much more defined on where it, it's got a kind of a scoop pattern, much more defined as to where the profit taking was occurring and when the buying came back. Same scenario here on CNAT. Again, there's our fry pan bottom failure at the 50. There's our bobble. Notice what the bobble couldn't do. They couldn't close this back below the T-line. Where am I going to be buying this one tomorrow? On positive trading tomorrow. So where's my next target? Probably up here somewhere. I don't know why this one's on here. And where's my stop loss? Well, if this is a bobble breakout and it's trading higher, where do I not want to see this trade? I don't want to see it close back below the 50 or the halfway point of this candle. Can you refer to W and let me know if it's ready to go or short? WABA, wait until we get to the end. When I get done with the all the charts that we want to look at as far as analysis, then I'll tell Jim to do the double line, and when he does the double line, you put in the chart you would like to have us look at. There's also very simple breakout patterns. Again, there's our slow curve, closed right here. What's it tell us if it opens positive? Telling us the 50 is not acting as resistance, this level is not acting as resistance, and our slow curve breakout is in progress. Alan, again, if you can visually say the pattern, let's see, we're still having a little bit of problem. Hold on to your individual requests until I tell Jim to do the double line, and then you can put your request in. So we've probably a lot of these that you're requesting we're really looking at anyways before we get done. So that tells us common sense that if they open it positive after this slow curve and the breakout of the 50, what do they tell us about the 50? It's not acting as resistance. What they tell us about this level right here? It's not acting as resistance. There's a new dynamic, which is usually a fairly powerful dynamic on the breakout. Con, same breakout. Notice your doji best friend. This is what we call a double doji setup. Came up, hit resistance. Notice the pullback. Somebody was asking, how do you know a reversal versus consolidation? They weren't pulling this back with any great definitiveness. Then they gapped it open, opened at the 50, and traded higher. More than likely, you're going to see more upside. A slow curve usually doesn't have to, remember, a J-hook pattern usually is being set up with a strong price move. Let's see if I can find one. A strong price move and then a J-hook, whereas a slow curve might be kind of in a coming out of a fry pan bottom. It doesn't necessarily have to have the prerequisite of a strong price move. But again, the benefit or this is con, the benefit of the visuals of candlesticks is we can see what patterns they're setting up. Again, here's your kind of your fry pan bottom breakout. Notice how they gapped up to the resistance level and went through it. Again, this is the areas based upon these patterns that you're going to be making big profits. JNUG, this is again where you observe the obvious. Let me make this a little bit smaller. See if I can do this. You can see where the resistance level was. You can also see that You had kind of a, well, shucks, what's happening? Kind of a wedge formation setting up. So when they broke out, notice how they broke out of this one. This is JNUG, the gold stocks. They did a doji gap up, your best friend, out of the resistance level. How long do we hold on to this? So you see a sell signal and a close back below the T line. Blue, kind of the same scenario. You can see there was kind of a resistance level right here. Fry pan bottom, broke out. When they break out, these are where the investor sentiment just gets tremendous on the bullish or bearish side. The opposite of a fry pan bottom is your dumpling top, which is a slow curving top. Fry pan bottom is where investor sentiment is building up. There's two advantages to recognizing the patterns and where they break out. One is that you're usually going to get a very strong price move. And two, they're usually going to work. That pattern is usually going to be still working no matter what the direction of the overall market is, because it's not, this wasn't setting up because of the market conditions. This was setting up because investor sentiment for that particular trading entity was setting up. Fitbit, this must have something. Oh, again, there's kind of your resistance level, and there's your best friend gap up breakout. I will use the 10-minute chart. Let's say, for example, I can't remember which one. Well, let's say, for example, this opened up and it hovered in here because the market was trading lower, and it took it a while. Yeah, I might flip to my 10-minute chart to see when the buy signals on the 10-minute chart started. But if the market is opening stronger and this one's opening stronger, yeah, I might buy within the first 30 seconds to 90 seconds. For Doji Best Friend, do you buy even if not oversold? Yes, depending on what the pattern is. Oh boy, sometimes you can see where the pattern is setting up that it's starting the, if it's, let's say, setting up for a J-hook pattern. That if I see that Doji Best Friend, which is already priced stochastics closer to the overbought area, if I can see it setting up a J-hook pattern, yes, I'll buy immediately. How do you tell when it's too late for an entry? This is the whole point of why we want to recognize what candlestick signals are telling us. Is it too late to get into this one? Probably not. It just broke out with a Doji Samly or a best friend signal through a resistance level coming out of a big, huge fry pan bottom. That tells me there's probably a lot more upside. Yes, if I didn't catch this today, what do I want to see the next day? And again, this is part of our entry training, is if this is telling us the bulls are taking control, what don't we want to see the next day? We don't want to see it open down here. That doesn't tell us that the bulls are there. We want to be buying, seeing that there's confirming strength the next day. The reason I was showing some of these patterns is because I get a lot of requests to say, well, which is the strongest ones? And that's what we're going to be going through in this two-day training. Again, the two-day training, I tell people, which I hope has been true for many people that have been in here for a while, but you're going to get a lot more information than what you expect. Not only recognizing the patterns, but understanding why they occurred. So here's our special. See if I can do this correctly. We're going to be doing, again, on September 23rd for 4 hours, usually starting around 9 o'clock in the morning, go into 1 o'clock. We're going to be doing what we call the top-ranked training session. It's $495 for non-members, and for our members, it's $497. Members, $297. So a lot of people email Abraham and said, well, if I just join, won't I get a better price? And the answer is yes. And remember, if you join the Candlestick Forum, you're going to get discounts on these trainings, number one. And number two, each day you're going to get 2 or 3 stock picks, not so that people have stock picks, but you can see what the video is showing you of why that stock pick was recommended. But more importantly, we train people how to do their own scans, because sometimes the stock picks we put out don't open up properly the next day. But if you've already done your own scanning, you can pretty much find other trades that are working well. So anyways, that's there's the link to join us on Saturday. Again, the one thing that we try to give people is more information than they'll ever than they expect. So with that, here's some of the charts that we're looking at right now. This is why you can always find good trades no matter what the market is doing. Obviously, the stocks that are being affected by the hurricanes are doing well. We started buying Home Depot. Now, the problem with some of these are it should be obvious that Home Depot is going to be acting well with hurricanes. And there's always the criteria that if something is so obvious, it's not going to work. But the advantage we have is, yeah, we can see when it's obviously working, and we know when it's time to get out. Now, if you bought on this breakout, and we have a doji up here, where's a very simple place that it shouldn't trade if we're still in an uptrend? Shouldn't trade back below the low of the doji. That tells us the profit taking has started. Yes, you got good drug trades. Let me pick out a few more here. We recommended Hertz a while back. When it came out of that Morningstar signal, I don't know why we got lines all over the place. But you can see right now, people are asking, so can we still buy this? I would say yes, because you can see what the trend is. You're still in an uptrend, and you had another little Morningstar signal right here, telling us exactly what we wanted to know at the T-line. Yeah, I didn't see low doing as well. Well, it came back up again. It was traded off. But you can still buy lows. If I was going to be buying lows, I'd be buying it probably above today's open. If it comes up through there, tells me the consolidation's over and they're heading for the breakout area. New link. I know some of the people in the chat room today were trading this one. Here's a perfect example that you had a breakout of a fry pan bottom. So the question is, you buy a stock that's already up 3, 5, 10, 15, 20%. You do if you can recognize the pattern and the signal. If it gapped up from a doji, what type of signal do we have? Your best friend signal. That tells us there's probably going to be a lot more upside. Then notice what else you can see on this chart. Here's your big island reversal. You can draw a line right around this without touching any of the trading. That big island reversal tells us it's going to be a very strong move from here. So what type of move do we expect? Another probably a 45-degree coming off here, just a steady uptrend. Let's see, TXMD. There's that slow curve breakout. And where is it breaking out? Trying to break out through this uptrending channel. Notice how it started. Notice all the indecisive trading right here. Again, indecisive because we can see the tails and the bodies are very small. Then here's one of our strongest reversal signals. This is called your inverted hammer. And it opens positive the next day. Nothing official, just my analysis through 40 some odd years of trading. But if you see an inverted hammer and it opens positive, the probabilities are probably 95% or greater that you're going to be in an uptrend. What happened right here when you got to this level? Well, there's your doji sandwich. And what do we know about a doji sandwich? There's usually going to be more upside. Oh, which one is the island reversal? New link? This is your island reversal. Notice there's a gap over here and a gap over here. So you could draw a line right around all this, that big island down here, because it's all by itself. So the island, no, it's not a candlestick signal. It's just a technical signal that everybody uses, Western as well as Eastern, an island reversal. But the fact that it broke out with a best friend signal gives us more implication there's going to be more upside. Yeah, some, that's true. Some others. Why? Another one. There's your reversal. Doji, bullish confirmation, gap up through the T-line, held the T-line, kind of a J-hook pattern setup. Now, this is why we're going to be doing an entry strategy. Again, everything is kind of logical, common sense. We were getting ready to short MYOK, and we had our short stop down here someplace. Because if this was reversing and heading back down, what should we see the next day after a bearish left-right combo and a close below the T-line? That there's follow-through. The fact that they opened it positive and traded positive, what did that tell us about our strength and our downtrend? It wasn't there. It kept us out of a bad short trade. So what we're looking for, again, we recommended Cena as a short today. Because what did we want to see? Now here's a situation where it opened positive and traded positive for a little bit. When did we go short? When it came back down through the close of the previous day. Why was that? Because notice what type of candle would be forming after failing at the T-line. It was telling us that we were probably in a bearish wave 1, wave 2, going into bearish wave 3. So, and what else did we want to see? We wanted to see it close below this level, which might be our support level, but close below that. That gave us more indication that if this is wave 1, wave 3 could be all the way down into this range. Can you tell us what scanning tools do you use to find patterns? Patterns are usually on the basis of scanning for the signals. And then you can see what type of patterns those signals are in. We do have all the formulas on our website. They're for free. How do I register? I think, GW, if you look at the newsletters, you should be getting free sign-ups where you just register into the sessions for free. They should be coming out to everybody. Jack, our junk in the box. Notice our doji gap down. Notice the failure at the 50. Wave 1, wave 2, we're in wave 3, and we're right at this level. It can still be shorted. Even though we're getting close to the oversold area, where's our next logical target? Probably going back into the downtrend down here somewhere. Oh, Becky, do we have the link for people to register for the free training sessions? Throw in here. Okay, this is where you observe the obvious. Again, our recommendation to go short on Ren was the left-right combo right there at the failure at the 50. We could see which direction this trend was already moving. We know that the parallel could take you all the way down here to the $20 range. So we shorted this one. Now, we didn't short it yesterday because that same entry strategy that we wanted to see it open lower, it didn't. It traded up. So where did we put our sell stop? Right here, that if it opened lower and started trading back below this level, that told us they failed at the T-line. Just gave you a high probability situation that the selling was still there. You use left-right combo, use all of them. There might be a day where you see two best friend signals and no other signals. Next day it might be a left-right combo. 2 days later it might be a J-hook pattern bobble breakout. I use whatever is the most strongest signal that is we can scan for on that that particular day. Right now, there's lots of short positions, obviously. There's a kicker signal. And a kicker signal to the downside is very strong, telling us that this downtrend is still in progress. Now, again, observe the obvious. Everybody knows that I think, see, here's another, I don't know why I've got this one in here, but a bearish J-hook pattern. Is that the right one? No. I kind of figured that was wrong. This is an insurance company. There's your shooting star gap down. There's your bearish doji sandwich. So if you started shorting right in here, or even on a lower open today, you knew that today's trading probably is going to be the same magnitude as this one right here, bearish doji sandwich, giving you a very strong downtrend. Again, that's what's happening with these insurance companies, obviously, right now, that you can make good money on the short side. Allstate, same scenario. Let me make this bigger again. Oh, yeah, Richard, I think, again, if you're having problem getting stuff, just email Abraham at candlestickforum.com. Jim or Becky, could you type in Abe's email address? So if we can see that a sector is trading off hard, that means everybody's selling those off. That's where you want to be, is in sectors that the big money is getting rid of them. These are all insurance companies. Look at the magnitude, especially if you're an option trader, that you're making good money on these short positions. Again, this is kind of that slow curve, and where did it finally break down? Once it came down through this level. So if I see something like this, where we're in a downtrend, there's our bearish engulfing, there's our close below the T line. Where do you think the next prospect or the next support level is going to be? Probably at the bottom of this trend channel. So I can look at this and say, all right, is this worthwhile? How much time will it take for me to get there? Should I be buying puts or should I be buying put spreads? These are all things that we can now analyze based upon the magnitude of the move and how long we have to expiration. Okay, so that's about all I got for tonight. So two things going on right now. Every Tuesday night, we will be going, for the people that are fairly new to candlestick signals, we're going to be going to, we'll be analyzing each major signal in detail. And then 2 weekends from now, we're going to be doing that 4-hour training session of which signal combinations provide the strongest reversal patterns or trends, and then we're going to quantify them, which ones. Do you use fib lines? I do, not as a primary factor, but if I see an uptrend and I see it's pulling back, what do you think everybody else is watching? They're going to watch to see how far your fib retracement number is going to be. So I throw them on there, not because that's where I think it's going to go. It's if it's in a sell and it's moving in that direction, I have the Fibonacci retracement levels on, so that if I see a buy signal at one of those levels, then I know that's the retracement level they're going to start buying again. So everything that you see in our charts or use in our charts, the first criteria is the signals themselves. After that, you add everything else that you know everybody else is watching to kind of confirm what the signals are doing at specific levels. Okay, there's the way to sign up. Becky, thank you for putting that up. You can sign up for the free trainings each Tuesday night at 8 o'clock. And so we're going to go into each major signal with describing what they look like, where they occur to produce the best probabilities, and describe what the psychology was of investor sentiment that created them. Once you understand that, it's like riding a bicycle. Once you're up and running and you know what you're looking at, it becomes very easy. Yeah, and Becky just put in the weekend training session. All right, so with that, Jim, go ahead and do the double line. And we'll take a look at a few of these. And in 4.2 seconds, do the next double line. All right, we're going to kind of try to run through. Oh, it's already after 9 o'clock. AK Steel. Yeah, notice that it broke through the 50. So where's your next likely target? Probably coming back up into the congestion area. Weibo, just stay long. Anything like this out of the way. All you can do at this point, coming out of this right-hand bottom, is just stay long as it doesn't close back below the T-line. Adobe, same scenario, just a steady uptrend as long as it stays above the T-line. MRNS, same scenario, kind of got a little J-hook pattern setting up. You had a left-right combo. You can still be buying this one on positive trading, figuring wave 1, wave 2, going into wave 3. Facebook, I don't trade this very much because it doesn't really have a strong dynamic movement to it. It's been a slow, steady uptrend. It's just hard to trade. Now, you did have a left-right combo that came up through the resistance. So if you're long, you stay long on this one. Bzun, another one you can be buying as long as it stays above the T-line. Baba, nothing yet. You don't know whether they're going to open this lower or it's flat. So I wouldn't be long or short Baba right now. Just not in good trading condition. Gold, I can do actual gold here. Which one do we want to do? This is gold. This is the October contract. You can see when it broke out through this level on a little J-hook, you're in the next wave. You stay long on gold until you see a sell signal, which means some of the biggies like Halliburton has moved up right to the first target. Notice all the dojis down here as it was basing, telling you there was indecision, and then when they made their decision, went to the next resistance level. That's not one. Slumberger, same scenario. And look at the indecisiveness down here. You can still be buying this one on positive trading with the next target being this level right here. ACAD, just stay long as it stays above the T-line. Square, nice fry pan bottom. You can be buying this one on positive trading with the anticipation that it's going to come back up and test this level, and if it breaks through there, it's probably coming back up into the trend. DSW, and that's a bobble. You can be buying this one on positive trading. You just make sure it gets back up to the 200-day moving average. It needs to get through that level to do a bobble breakout. And Macy's, you can see how it kind of failed at the 50. It may also be in a bobble. So if I had owned this one today, I would have closed it out with it closing back below the T-line. Now you just watch to see if it's going to support at the T-line, or failed at the 50. If it supports at the T-line, then you get ready to buy it back if it comes up through the 50 again. Stay. Nothing here to get real excited about. If you're thinking of going short, you want to do it if it trades below the lows of the last couple of days. Buffalo Wings, stay short until you see a buy signal. Alcoa, stay long until you see a sell signal and a close below the T-line. NVIDIA, flat as a pancake, wouldn't be long or short. You can see it's in a wedge formation. You don't do anything until it breaks this way or breaks this way. Oh boy, UVXY, that's just a junky chart. I wouldn't be long or short this one. Just no direction to it. G-Pro, very simple. Doji gap up, did a doji. If it opens positive, you can be buying it. Remember our simple rule of the doji. They're going to move it in the direction of how they open it after a doji. So if they open it positive, what it tells us about today's profit taking, that the profit taking is over. This is not a kicker signal. That's your, that's just your doji gap up. W day, just stay long, just a steady uptrend. And here you can kind of see the wedge formation. If you're long, you stay long. If you're looking to buy, I'd buy it if it breaks out through this level. Nugget, just stay long. You can see where this broke out of the fry pan bottom, right here at the 50. Stay long until you see a sell signal. PNC Bank, stay short. Now, when you're in the oversold area, you pick a spot that tells you they shouldn't be trading if it's still short because you're in the oversold area. So I would say put a buy stop right here if you were short, just above the 200. It shouldn't come back up through that level. CVRR, nice J-hook pattern setup. You can buy this one on positive trading with the wave 1 and wave 3 probably taking you up to the 200. We did J-Nug. That had a nice little breakout. Down here, you stay long until you see a sell signal. And ZAIS, stay long. At this point, again, something happened here where you came out of this indecisive trading area with a big kicker signal. Expect a 45-degree off of here. If I was long this one right now, I wouldn't want to see it trade back below that level. That would tell me the sellers are taking control. We did G-Pro, right? Yes. Used to open positive. Oh, we just did that. Court. Let's move this back down here. You're getting a little bit toppy. Notice that your hanging man, your hanging man, your doji. Makes it very simple. You want to put your sell stop. Where did I see that one? Oh, I didn't do some of the other ones here. What was I thinking? So you have that same scenario going on in Labu. Kind of a doji, hanging man. So where do you think the confirmation would be that the bears are taking control? Probably back down through here. And you have something like CR EP. Notice what was happening up here. That was the indecision. Where was the logical place if you were long to put your stop? It shouldn't come back down through these lows. You just put a stop there because that would be the wrong direction. Don, I don't know what that signal is. JP Morgan, just stay short. Watch to see what it does at the 200. SPWR, nothing here to get real excited about. You can see you're kind of sideways. If you're long, you can stay long. Just obviously watch to see what it does once it comes back up to the 50. JB Hunt, J-hook type pattern. You can stay long on this one. F. Oh, that one's not coming up. November soybeans. Which ones are November? That X. If you're long, you stay long. And that right now I'd have a sell stop right in here. If it came back through that level, it's coming back down to test the T line. I think we were better off in the, well, we were at one time. Notice how the reversal occurred on wheat. It gapped up and did a shooting star, Greystone Doji, opened lower the next day. That's what you should have been right back out of that trade. Fluoro, nothing to get excited about here. If you can look at a chart and you don't know whether it's going this way, or this way, then you've lost the whole point of candlestick analysis. Get out of the trade and go find something where you can see where the obvious move is being made. I skipped Bidu, apparently I did. Bidu. This one you can get ready to buy. If it breaks out through this level, then you have wave 1, wave 2, wave 3. SGY did break out. Kind of a slow curve, break out through this level, I'd be a buyer of this one. Telling you that resistance level isn't going to be acting as resistance anymore. Costco, nothing wildly exciting here. If you're long, you can stay long, but if you see some weakness here, pretty much telling you this congestion area is still acting as a resistance level. On Agra, this one has to open positive. Remember our simple rule of the doji. It's going to move in the direction how they open it after a doji. If it opens lower, then you see whether it's going to support here at the 50. If not, you close it out. HBM backed off today. So to stay long, it has to open positive and trade positive. If it opens lower, you close it out. Worst case scenario is it trades lower and comes back up. You can always buy it back if it comes back up above the T-line. Whiting, nothing here yet. One of the oils that just hasn't gotten moving yet. Alta, if you're long, you can stay long. Just be careful. Usually they'll pop back up to the congestion area or the trend area. If it opens, right now I'd use today's open as my stop. If it came back down through there, pretty much telling you they're going to come back and test the T-line before moving up again. ATVI, just a slow, steady uptrend. If you didn't close it out yesterday, it had to open positive today, which it did. I can't get I don't think I can get that stock here. No, it won't come up over here. JNUG, we did. You stay long coming out of this fry pan bottom. Avis, you stay long. Not a very exciting trend, but it's still in an uptrend. Andy. Whoops, A-N-D-V. Another one that supported right here on the T-line. You can be buying this one. I'd be more apt to buy it breaking out through this level, though. We did Facebook. MTW backed off. Whoops, I say it backed off. This would have been one that I would have closed out today with it trading below the T-line. You can always start buying this one on positive trading tomorrow. Ford, very sure, not quite a sell signal, but Ford's had a hard time getting out of this sideways trading range. If I was long, I would use today's low as my stop. If it came back down through there, it's probably coming back down to test the T-line, which you saw happen today. Again, the T-line is not on anybody's charts. So when it came right down smack dab to the T-line, that is the natural support area. If you're long this one, it has to open positive and trade positive. If it starts trading lower, close it out. Let's see, is this Fiat? The Fiat? Nah, that one's not coming up. CRM, just stay long. If you look at it, all right, IXG. You stay long on this as long as it stays above the T-line. Just make sure your volume is good and hefty for this price stock. And NAC, you just stay long on this as long as it stays above the T-line. Snap, we already did. That's your bobble breakout. I wouldn't be afraid to be buying this one on positive trading with the anticipation wave 1 and wave 3 is going to bring you back up into this area. We did ATVI. We did Goldman. Goldman, stay short if you're short. DNTV, notice all the dojis. Somebody again asking, how do you know if it's a pullback or just consolidation? When they're pulling back and it's indecisive, that means they're not real convinced in their selling. Get ready for the next wave up. So you've got a J-hook pattern set up. This is wave one. Notice how wave one started with your slow curve breakout. Now look at your J-hook pattern. Bunch of dojis. Now they've told you which direction they're going to go. I think we did Ford, right? Yeah. What did I just do? NVS? Is this one traded overseas? Looks like it's choppy. Right now, all you can do on this one is stay long and look for a breakout of this level. Las Vegas Sands, get a little doji up here, getting toward the overbought area. Pick a spot where it shouldn't trade. I would probably, for safety measures, I'd put a sell stop at yesterday's open. If it comes down through there, the sellers are taking control. American, stay short. We did Facebook. Facebook, just nothing wildly exciting. If you're long, you can stay long. We did Costco, Chipotle. Nothing wildly exciting here yet. I'd rather buy this one on strength. You've had the bullish harami on the pullback. It's probably going to be in an uptrend. It just may not be a very strong uptrend. Nothing yet to show that the bulls have come roaring in. ALDW, boy, I probably wouldn't be long or short this one. Not a directional chart. Walmart, again, not a very good one to trade because it's your basic institutional trader. So it doesn't move around very much. But right now, if you're long because of this left-right combo right off the 50, I would suggest your next target is up here. Now, that's not a very big percentage move, but if you're holding it long-term, you're in the right direction. If you're trading the options, and the calls are probably good. Hive, you can be buying this one on positive trading, expecting the 50 to be your next likely target. XON has to open positive to stay in it. It starts trading lower, close out the position. NetEase, you can be buying this one. Nothing greatly exciting on this one yet, but if it starts trading positive, kind of figure the 50-day moving average is going to be your next target. The golds, stay long. AT&T, you stay short on this one if you're short. I usually don't play around with AT&T because the magnitude of movement on this one isn't very dynamic. We did HBM. All right, only got a few more. Tesla, nothing here. You can see it's in a wedge. I wouldn't be long or short. The biotechs, you stay long. What? Labu is a little bit iffy. It has to trade positive tomorrow to stay in it, or you don't want to see it trade off tomorrow. HRTX, another one that's kind of in a sideways mode. I wouldn't be a buyer of this one unless it breaks up through today's high, which is breaking through that other high point. And HZNP, another one that I probably wouldn't be long or short right now. Stochastics are heading down. You're sitting right on the T-line indecisively. Absolutely no direction to this one. And ALB, another one that's not very exciting. boy, yeah, just not a whole lot of magnitude of return from these. If you're long, you just stay long. Don't let it close below the T-line. All right, everybody. We're going to have a busy month in September. Again, Tuesday nights are the basics of candlestick analysis, the 12 major signals. 2 weekends from now, I guess not this weekend, but next weekend, we've got a multi-speaker session on our website. And we will be doing a basics of option trading or how to use options, especially in conjunction with candlestick signals, probably within the next week or so. All right, everybody, have a good evening. We will see you bright and early in the chat rooms. We'll see you then.